We're going to be looking at hybrid funds in this video. Hybrid funds are those that contain multiple asset classes. Most hybrid funds have a mix of equity and debt, but there are certain hybrid funds that also allocate to commodities and real estate. Multi-asset allocation funds are an example of those. Hybrid funds provide investors a very simple way to invest across asset classes. Instead of investing in multiple funds, your allocation can be taken care of through a single fund. When you invest in a hybrid fund, you're also giving the fund manager more flexibility to allocate investments. So, if I was to use an example, suppose an investor had a 70% equity and a 30% debt allocation, they would need to monitor that constantly and make adjustments whenever the allocation was out of sync. Whereas in this case, you're giving the fund manager the flexibility to allocate as per his or her understanding of the stock market, and they're going to make decisions based on how they think the market is going to move. There are many types of hybrid funds. I'm giving you some examples here. This is not a comprehensive list. We'll come to the more comprehensive list later in a subsequent video. But just to give you an idea, conservative hybrid funds are normally about 70% debt and 30% equity. Uh, these funds normally give you a much better return than fixed deposits, and they are quite safe considering the allocation to equity is only 30%. Then you can have aggressive hybrid funds for the more daring. These would have about 70% allocation to equity and the rest to fixed income. And this is for those that are looking to get a decent return because of the equity component, and they're okay with taking on the risk that's associated with it. Then you have balanced advantage funds. Uh, these can go up to 100% equity. These are uh, the most rewarding and the riskiest hybrid funds that one can normally come across. Then you have dynamic asset allocation funds, and these are funds that I really like because these are rule based. Um, the decisions on the allocation between equity and fixed income are taken on values such as the price equity ratio or the price to book ratio. And normally, when equity markets go up, the equity allocation comes down, whereas when equity markets tend to go down, the equity allocation goes up. And these funds tend to give a pretty decent return, and they reduce the risk subsequently. From a taxation perspective, um, hybrid funds, especially in the current tax regime, provide a lot of benefit because if you hold them for more than 2 years, your long-term capital gain is only 12.5%. This is much better than the rates that we had seen in previous years. And so a lot of people are making a shift from fixed income to hybrid funds as a result. So if I was to use an arbitrage fund as an example, arbitrage funds tend to give you 7 to 8% with very little downside risk and also with better taxation. So a lot of people, instead of putting their money into fixed income where the taxation is your uh, rate applicable to your income, they're paying 12.5% capital gains tax, which is definitely much better. So hybrid funds basically are a very simple way to get asset allocation done, and they help you again from a taxation perspective. And also, some of these funds, like the dynamic asset allocation fund, work on rules, and they make it very easy for an investor to adjust their asset allocation as markets move. I hope you enjoyed this video. Do contact me at the email address and the mobile number given. The email address is adit@aditshah.in. The mobile number is 98675 87495. Do visit my website, which is www.aditshah.in. Links to my social media handles are available there. Please do follow me. Thanks for taking the time to watch this video.